Eric Muadid, Muadid.com, with a weekend market analysis for the weekend of May 9th and May 10th, 2015. Let's take a look at how markets closed on Friday. We see a nice gain in the markets, about 1% plus on the Dow, NASDAQ, and S&P 500. We see that gold and crude oil were also up almost just under 1%. If we take a look for the week, S&P 500 was up 0.37%. For the week, the Dow was up the most, up 0.93%, and for the week, the NASDAQ was unchanged, surprisingly. All right, so that's how the week settled out, pretty much unchanged to slightly up week for the entire market as far as the major averages in the US are concerned. Let's begin by taking a look at the NASDAQ weekly. We can see that at the conclusion of the week, we were unable to go back above 5,026, which was the prior weekly breakout. So we did stay below that, but during the week we had found support at the 10-week moving average, which is a sign of strength. The next buy point for the NASDAQ on a weekly basis is going to be for the NASDAQ to clear 5,092.09, which is this close about 3 weeks ago, the current all-time weekly closing high. Again, 5,092 is the next breakout for the NASDAQ. If we take a look at the weekly RSI, we can see that this is now still in the formation. Huge wedge going back to late 2014. At some point, we are either going to break out for a nice bullish move, or eventually we might even break down outside of this wedge for a bearish move. So either big move above that or big move below that. Eventually the market is going to decide. So we still did end that week within the wedge. Tough to tell which way this market wants to go week to week. Take a look at the NASDAQ daily, and we can see we did manage to close back above the 50-day moving average, which is good. We see that on the daily RSI, we had this support level come in play during the week when the market was dropping about 2 days ago, and we did find support on this line. As you'll see in other markets, this line did hold very well, and so the bounce and the nice move on Friday up 1.17%, because the daily RSI managed to close above 50. And so let's take a look at the Dow, and on the Dow weekly we see that it finally managed to close above the previous all-time weekly closing high at 18,140.44. So this is a fresh all-time closing high for the Dow. If it can stay above that, then generally speaking the bulls are in control. Otherwise, if we slip and dip below that breakout level, then that's going to be another instance of a failed breakout attempt in a major market. But for now, the close is good. We have to respect the potential for upside. If we take a look at the Dow from a weekly RSI standpoint, we see that we are still just now moving outside of this wedge, and as long as the market can stay above the wedge, then that's a breakout, and that's a bullish breakout. So for now, that's what we can look at for direction, and the close of the week was good for bulls if the market can continue pushing higher on that weekly RSI wedge. Take a look at the Dow daily. We had come back to this price trend line here, which held during the week when the market was going down. So that was good, much needed support for bulls. That held. We also managed to go back and close above the 50-day moving average, which is good. Now we haven't made all-time daily closing highs. The all-time daily closing high for the Dow is at 18,288. So it needs to be above that for it to record a fresh daily closing high. If we take a look at the daily RSI, we see that we have this massive wedge type formation, here connecting the lows recently was good enough to help the market find stability during the sell-off midweek, and so support came in there and held. Now we seem to be moving slightly above the wedge. Again, if we can sustain and stay above the wedge, that's gonna be good for those who want to see the market going higher. Now I have to point out something here, and not to confuse anybody, that the market has been stalling around current levels on the daily RSI. As you can see, if we draw a line somewhere around there, this line does give us some resistance levels on the Dow. We had resistance here on the line, which was this short-term high, and a pullback that took place. We saw another resistance on the line there, which was the main high, the current all-time daily closing highs, and now we are getting close to this level. So this level could also be resistance. If we get to that level and show resistance, then the market is due for a pullback. In fact, if you take a look at the Dow hourly, we are back at RSI resistance on the hourly. Simple line connecting the highs like that. You can see that this is where we stalled throughout the highs of Friday's nice strong up day, and as long as that's the case, then this market could easily stall around here, because this daily line has been very instrumental in stopping every move in the market. As you can see, resistance here was also responsible for these short-term highs and a pullback. So depending on how things go, if this is confirmed as resistance, I would expect the market to start pulling back. Otherwise, if we can break out above that line, so a breakout above this very simple line connecting the highs could be exactly what the bulls want to see. We closed the week with the market showing resistance, so maybe now the resistance is in play. Otherwise, if the market can break out, that's going to be indication of very strong market intentions to go higher. There's also another line. If you draw the highs like this, connecting the highs, so this line here connects all these highs in the market. You can see this high corresponds with resistance at the line. Even this drop came up off the highs there. We had another resistance there, short-term highs, double top, triple top resistance there, short-term highs, and now we are showing resistance here. So if you're looking for a reason why the market could stall, then this hourly chart gives you a very good reason for that. We take a look at the Dow Transports, which by the end of the week managed to hold above recent 2015 weekly closing lows. So it managed to stay above the closing low for 2015, and that is at 86.49. It also managed to close above this line of support on this long-term channel. So it did manage to, by the end of the week, manage to hold above those two lines. Support from the lows of the week for 2015 weekly closing lows, and also support coming from this trend line. So we also see that there's another evidence of support on the transports based on this line that we've been discussing last couple of weekends, and this line comes from the fact that previously we had seen it break out here, which began this nice move in 2013. Since then, the market has been using support at the backtest line for re-entry back into the market, and also this was uniform activity support, which is here, and recently here off the lows there, and now this is also holding. So as long as the market is holding on the RSI on the weekly, and also holding on the price channel, this looks like a market that wants and is looking to bounce on the, as far as the transports are concerned. We take a look at the daily. We see that at the end of the week we managed to stay above this level where it has been seeing support since the breakout here. This market has been coming back, and on multiple occasions has found a reason to find support during all these market sell-offs. In fact, there have been too many days when the market did look like it was breaking down, but we seem to have found support again even here the last couple of days. So as long as the market is holding that, let's just give the market the benefit of the doubt in terms of support. It's only when we break that support that we might start looking for bearish reasons as to why the market could go down. So a break of that could be bearish. Right now we are looking at support, indicating that for now the market looks to bounce based on that support at that line. We take a look at the S&P 500, which is still trading well above the 10-week moving average, holding very well after trading below it for some part of the past week, but did manage to close higher for the week. And we see that it has a new breakout level, which is the closing high from about 3 weeks ago. The level to watch for a fresh breakout is 2117.69. Now, if we take a look at the wedge on the weekly, it is still forming this massive wedge, and we haven't decided which way the market wants to go. Of course, if it breaks out above that wedge, that's going to be bullish. We've been watching that wedge the last couple of weeks, and if we can break below that, and if we do break below that, that's going to be bearish. Since the wedge is still in formation, we don't know which way this market is trying to move for the next big swing trade. A quick look at the S&P 500. On a daily, we see that we held the 50-day moving average here and traded well on Friday. We also see that we had a nice move back above 50 on the daily RSI, which might suggest a reason why the market had a big swing on Friday. If we take a look at the RSI, there's a line connecting recent RSI lows. If you draw it like that, it connects very nicely to all these lows. And so the support coming into late Thursday, some of us were thinking the market was going to bounce because of this very simple line showing support here. And so now we have to contend with the exact opposite argument, that maybe now the market is back to where it has been showing resistance based on this line. So we closed exactly on that line. If this is confirmed resistance early in the new week, then we should expect a pullback. Otherwise, if the market can break out above that obvious line of resistance, maybe we are in a new leg. For the market to break out to fresh all-time daily closing highs, it needs to close above all-time daily closing highs at 2117.69. So it needs to trade above 2117.69 if it's going to record a fresh all-time daily closing high. If we take a look at the S&P 500 hourly, just want to show you a very simple line, just like the Dow. We are back at resistance, and again you can see we stalled here at the highs of Friday's action, and the last time we stalled on this line is responsible for this high here before this drop here during the week. So we are back to that resistance. If this is confirmed resistance, we should expect the market to pull back. Otherwise, a breakout above that line is exactly what the bulls want to see. You can also see this resistance on the S&P 500 30-minute chart, and just a simple line connecting recent RSI highs, and I'm using RSI period of 2021. You can use 26 and get the same results, but you can see that on the 30-minute chart, this is where it should show resistance. Last time we did stall around this level was during the high here, and we've come back here. If we show resistance in the next day or two, we might get a pullback also. So that chart also here, we see that potential for this being resistance is very high. Otherwise, a breakout above that line of resistance could indicate fresh momentum. But we ended the week with a chart that seems to me showing resistance. So my thinking here is that the hourlies and the 30-minute charts are showing resistance, and so maybe we start the week with a little bit of a pullback. We take a look at Apple, which, as you can see here on the monthly, needs to break out above recent monthly closing highs. And for the stock to be in a breakout mode on the monthly, the level to watch there is 127.93. If it can stay above that level, that's breakout mode. One thing I've been saying is that the RSI looks great. RSI has been trading above 69.1 since mid of 2014. So all it needs to do to be on an aggressive up move is to be above 127.93, which is all-time monthly closing highs. Take a look at the daily. Just like the other markets, we can see that the daily did find support at the 50-day moving average, which is good. It's what you want to see. And also Apple has this very simple line connecting the lows where it's been finding support, and over the last week or so we see that this is double bottom support with a nice move on Friday. So as long as it is holding this line, the market should be eventually taking this stock much higher. So as long as it is defending this line well, I think the stock looks great, and it just needs to trade above 127.93 for it to be in breakout mode. Take a look at the VIX, which gave us a good signal that the market was due for a bounce midweek, and it's because if you go back to the VIX hourly, it came back to the level I've been talking over the last year or so, came back and hit that level midweek, and once we saw that resistance, the indication was that the market was telling us the market was due to move higher. And this also connects the highs on the VIX like that. So either way you look at this, this was going to be resistance. Once the market confirmed this resistance, I believe, was coming into the trade on close of Wednesday, we saw this resistance, and I sent subscribers a message telling them that the market, as long as the VIX was showing resistance, the market was due to move higher. Now, just want to point out something here, and let's take a look in conclusion, and I'll have part 2 of this weekend's market analysis sent to subscribers. So this is part 1. Part 2 is going to be ready sometime during the weekend, so be on the lookout for that email. You can see here that the S&P 500 on a monthly chart needs to stay and break out and hold above 2104.50, which is the monthly closing high as of right now. So if it can stay above that, this is a monthly breakout. You can see RSI continues trading well, trading above 69.1. We take a look at the Dow, and on the Dow monthly, you can see that it needs to stay above all-time monthly closing highs to be on breakout mode. The level to watch for the Dow for breakout and for strength is if the Dow can stay and hold above 18,132.70. If it can stay above that level, then it's breaking out. Also needs to move its monthly RSI above 69.1 for it to confirm strength. Right now it hasn't yet moved above 69.1, but the key here is to watch 18,132. Anything above that would show breakout. Take a look at the NASDAQ. And we can see that on the monthly, it is already on breakout mode, trading above recent monthly closing highs of 49.63.53. And the description should have all these numbers, but if it can stay above this monthly closing high, you can see RSI has held above 69.1 all the way going back to mid of 2013. So as long as the RSI is above 69.1, as long as we are trading above recent monthly closing highs, we have to respect the potential for this market to surprise to the upside. Eric Moade, enjoy your weekend. Subscribers, be on the lookout for part 2, which more than likely I'll send to you sometime on Sunday. Good luck, peace, and blessings. Woo! Yeah.